DEX trends in 2022, greater market share, new products, familiar challenges. It's possible that volume on decentralized derivatives can exceed decentralized spot exchanges at some point. DEXs are increasingly moving to Layer 2 solutions. The concept of digitizing financial markets and how they can be reimagined along user-centric lines is something people are still learning about. Regulation will continue to be top of mind for DEXs globally. Debate continues to rage over just how decentralized crypto really is. While cryptoassets such as Bitcoin, BTC, operate with no obvious center, critics note that the overall market is far too reliant on a handful of centralized exchanges, Binance, Coinbase, and Kraken, to name a few, for its liquidity and investment. Well, crypto has in fact already provided a solution to this problem, in the form of decentralized exchanges, DEXs. These are effective protocols for creating pools of assets that can be traded, and while they have remained relatively marginal in previous years, 2021 saw them gaining in importance. According to industry figures speaking to cryptonews.com, DEXs will continue to grow in 2022, fueled by the growth of competing blockchains and faster Layer 2 scaling solutions. And even if their centralized counterparts may remain dominant, they will continue to gain more market share, with rising demand for self-custody fueling their expansion. From billions to trillions. Trading volume on DEXs has been on the rise since DeFi summer in 2020, said Timo Ohlers, co-founder of Swarm Markets, a DeFi protocol. He notes that trading volume on DEXs reached roughly used 1.1 TRN in 2021. Uniswap, V3, for instance, currently posts 24-hour volumes of around $2.6 billion, while PancakeSwap registers nearly $800 million, per CoinGecko data. And fulls, such volumes are only set to increase as people enjoy the benefits of DeFi innovation and search for yield. He's not alone in predicting continued growth, with JHL, a pseudonymous contributor to Solana, SOL-based DEX Serum, expecting DEXs to continue capturing market share from centralized exchanges. One of the key drivers is the launch of more DeFi derivatives protocols on fast, cheap blockchains, he told cryptonews.com. We see strong volume growth from decentralized derivatives in 2022 and believe it's possible that volume on decentralized derivatives can exceed decentralized spot exchanges at some point, just like we see on centralized exchanges. JHL points to the launch of several new DEXs and decentralized trading protocols on Solana, including Psi Options and Zeta Markets. Zeta Markets is building an under-collateralized derivative platform for options and futures. These protocols provide the essential building blocks for a robust futures and options ecosystem to flourish, he added. Scale Labs CEO Jack O'Halloran is also bullish about DEXs, predicting that we'll soon start seeing DEXs take over market share from centralized exchanges. And for observers and industry participants, this is because they offer a number of advantages over centralized alternatives, including sovereignty, choice, and cost-effectiveness. DeFi infrastructure gives investors and traders full control over their assets at all times because of features like self-custody. Digitizing assets creates opportunities to collateralize anything, creating greater breadth in global financial markets and allowing for greater fluidity and optionality, said Timo Ohlers. He adds that DEXs are increasingly moving to Layer 2, L2, solutions, making it cheaper to trade for regular investors, something which will help scale transaction volume across DeFi. L2 solutions include projects such as Polygon, Matic, Loopring, LRC, Arbitrum, Optimism, and Starkware, to name only a few. User-friendliness, new products. Given that DEXs are expected to witness increased interest this year, one other trend will see them working on improving their usability, so that they can effectively answer growing demand. DEXs are currently too complicated and expensive for everyday users. The rise of custodial wallets, fiat on-ramps, and zero-gas transactions will bring the power of decentralized finance to billions of people in the next 5 years, said Jack O'Halloran. However, for Timo Ohlers, DEXs and other DeFi platforms have already gone a long way towards making themselves user-friendly, so 2022 will be more about consolidation in the area of user experience than revolution. That said, it will require an increase in education in order to familiarize more casual users with the underlying principles and services. Most DeFi platforms, user interfaces, are easy to navigate, but the concept of digitizing financial markets and how they can be reimagined along user-centric lines is something people are still learning about. Social media and independent groups are doing a great job to help close the knowledge gap so more people feel comfortable using DeFi, he told cryptonews.com. One way wider familiarity will increase is by DEXes and other decentralized platforms, moving more traditional products, such as securities, on-chain. Going forward, traditional finance and DeFi will seamlessly integrate into Fi. We know we will have achieved our goal to integrate traditional finance with the DeFi ecosystem when people will access financial products and services without even realizing they are on the blockchain, Laz added. Serum's JHL also expects DEXs to introduce smoother fiat onboarding in the coming year, including products such as FTX Pay. By enabling credit cards or debit cards on these crypto wallets, more individuals can onboard to the general DeFi ecosystem, he said. Challenges, regulation, and cybersecurity. There's also little doubt that one other thing DEXs will see more of this year is regulation. However, most participants are sanguine that regulators will take a balanced approach and that platforms will acclimate themselves well to any new regimes. Regulation will continue to be top of mind for DEXs globally. While we cannot predict regulatory changes, we see as more institutional investors come into the DeFi space, more DEXs will look into offering permission, KYC, Know Your Customer, or KYBD, Know Your Business, products to attract more institutional capital, said JHL. While Scale Labs' Jack O'Halloran suggests that we don't really know what exactly DEX encompassing regulation will look like, Timo Laz cites the case of Germany as an example of how regulators can take a balanced approach. Germany is an excellent example of how you can regulate DeFi, he said. The forward-leaning regulator has brought crypto assets in line with existing securities laws in the amendment to the German Banking Act in 2020.